Today we are unpacking everything from SoftBank's $5 billion robotics acquisition to Nvidia's massive AI financing push, plus the risks in the tokenized stock craze. And later, we'll break down why gold has smashed through the $4,000 mark and what that means for investors worldwide. Welcome to Finance Pulse, and here are the top headlines of the day. We start with a bold move from Japan's SoftBank group that signals just how serious it is about dominating the AI era. The tech giant has agreed to acquire the robotics division of Swiss engineering powerhouse, ABB, for a staggering $5.4 billion. The deal, still pending regulatory approval, means ABB will no longer spin off its robotics business as a standalone company, and instead, SoftBank will integrate it directly into its expanding portfolio of AI-driven technologies. This acquisition is more than just a robotics play. It's about building the physical infrastructure needed for artificial intelligence to reshape industries, from logistics and manufacturing to healthcare and retail. For SoftBank, this deal cements its reputation as one of the world's most aggressive investors in next-gen automation. Meanwhile, in the race to power the future of AI, Elon Musk is going all in, and Nvidia is right there with him. Bloomberg reports that Musk's startup xAI is now raising a colossal $20 billion, significantly more than initially planned. The funding structure is unconventional. It involves both equity and debt through a special purpose vehicle that will purchase Nvidia's advanced processors and lease them back to xAI. These chips will fuel Colossus 2, the company's largest data center project in Memphis, a critical piece of infrastructure designed to train and deploy next-generation AI models. The third major story today is a warning sign amid crypto's latest innovation boom. A growing number of digital asset companies, including Robinhood, Gemini, and Kraken, are launching or seeking approval for tokenized stocks, digital tokens pegged to the value of real-world shares. The trend is accelerating, helped by President Donald Trump's pro-crypto policies and a friendlier regulatory climate. In Europe, several platforms already offer these products, and even Nasdaq is preparing to enter the space. But traditional financial players and regulators are sounding the alarm, arguing that these products, while promising, carry significant risks to investor protection and market stability. Now, let's turn to a deep dive and one of the most eye-catching market stories of the year, gold's meteoric rise. The precious metal smashed through the $4,000 mark this week, hitting $4,295 an ounce, a historic high and the latest sign of how global uncertainty is reshaping investor behavior. So, what's driving the rally? At its core, gold's appeal lies in its safe haven status, with geopolitical flashpoints from Ukraine to Gaza and persistent concerns over US fiscal policy, including a government shutdown and mounting debt. Investors are rushing toward assets that feel insulated from political chaos. Pressure on the Federal Reserve to cut rates faster and President Trump's public criticism of the central bank have only amplified the flight to safety. Central banks themselves are fueling demand, with the World Gold Council reporting significant purchases and governments hedge against geopolitical shocks. Exchange-traded funds, too, are seeing record inflows, allowing retail and institutional investors alike to gain exposure without trading in the futures market. While jewelry demand has cooled due to high prices, the appetite from institutional investors and sovereign buyers shows no sign of slowing. And gold isn't alone in this surge. Major stock indices and Bitcoin are also hitting record highs as global capital continues to diversify amid uncertainty. This reportedly reflects a broader hunt for safety and growth in equal measure, with liquidity still abundant and risk appetite alike. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.